Hello there, and thanks for joining again Nordic Impact Business Summit here from a studio in central Copenhagen, and this afternoon with a lot of different things from the Nordic and international impact ecosystem. We will start out actually with a celebration today because we have actually a launch today of our second edition of Impact Report Nordic Investors, which is a survey and market analysis of impact investing throughout the Nordics and the Baltics. So I'll tell a little bit about that, and then further on we have another program with a lot of interesting things. So keep on joining us all the afternoon. So I start with this quote from Marcus at the Green Tech VC, SEB, one of the main banks in the Nordics. Because I think this is actually something we can see from many investors in the Nordics focusing on impact investment, that you have to keep on working and hang in to those solutions. But look a little bit on that report and analysis we did. I'd like to tell you a little bit about what's up and down here in the Nordics on impact investing. So we did a survey. We had 128 investors that participated from the Nordics and also some of the Baltic states. And what we see this year compared to last year is actually we have had more institutional investors, which means venture capital funds and also governmental funds supporting early stage investments, compared to last year where we had a lot of more individual investors like family offices and business angels. And what we see actually, when those investors classify themselves being impact first or financial first or a mix, we can actually see that whether they classify them as have focus on financial return or have focus on impact, actually they're all into impact. So we're not sure anymore after this market analysis that talking about impact first or financial first is actually a way to classify investors, at least not in the Nordics from our survey. We can also see that institutional investors, they have more focus on impact investments than individual investors. And you can see that in the graph that they actually provide more of their capital into impact only. And when you look at the asset classes that are mostly invested in impact, it's private debt, it's private equity and direct investments. And we can see here that almost half of them actually put their private equity investments into impact, at least of the respondents we had for this survey. We can also see that scaling is a key consideration as a driver for investing in impact, compared to, for instance, looking into the problems themselves for scientific data. And we think this might be a little bit about that early stage investors in the Nordics and probably elsewhere are former entrepreneurs themselves. So they have experience on actually how to grow a company, and then scaling and growth and such have a bigger matter maybe than the problem itself. So they might be a little bit biased on that. Scaling is also something about technology. So we can see from our report that many of the investors actually are keen on technological solutions are actually driving impact. And almost 50% of them have all of their portfolio into technology. Another thing we can see, and it's probably what we've seen all of us the last year, is that climate matters a lot. So if we look and ask the investors on SDGs, the Sustainable Development Goals, number 13, climate action, is actually on the top this year. Very different from last year, where actually it was about energy, health, education, and smart cities and innovation. Climate has climbed a lot. And we can also see when we ask investors if they are more into social or into environmental. And you can see it yourself from the graph that actually more of the investors are actually focused on environmental causes this year report. And using the IRIS Plus, which is a global set of themes for different industries, we can also see that climate is actually what investors most focus on. But agri-food, energy and health is also areas that the investors take on when trying to solve problems in the world. Nordic investors, they focus very much on deal flow and growth in their own markets, in their local country, within the Nordics or other developed countries. So that's actually where they focus as a criteria for what they choose of investments. But if you look at emerging markets, actually impact is more of a cause than growth and such. And that's probably because those investors that are focused in emerging markets might have taken a more strategic way towards impact investing than the ones focusing on our developed markets here in the Nordics. Another thing we saw is also that still a lot of investors have not a formal strategy or policy for how they invest in impact. And I guess that's where we are. We are maybe not much mature yet when it comes to early stage investing in impact. So I think that by time investors might work more on how they actually strategically look into those solutions and try to differentiate them. Still, we can see that a lot of investors are keen on impact investments, and we'll see that grow by time. Personal motivation is also a key driver for impact. We saw throughout this survey that it's a way to align your values with your investments. It's also good return opportunities, that is criteria. And it's also obviously to take part in that climate emergency that we have around the world, both in our local communities and throughout the world. So the personal motivation is very much a key driver from investors in the Nordics in impact investing. We also saw that you have to be more committed as an impact investor. It takes more time. You have to engage more the process of due diligence and advisory for yourself and the companies you invest in the Nordics as an impact investor are more heavily work, and you have to provide more of your own time or other person's abilities and resources to invest in those companies. So please download. We just launched a report online. You can go to our website and you find it there, the Impact Report Nordic Investors 2020. So we have invited today a good number of guests that actually will debate the report right now. So I'll hand it over to Kai Hockerts. He's a professor in social entrepreneurship at the Copenhagen Business School here in Copenhagen, and he will moderate a debate now the next hour on this report and impact investing in general. So Kai, welcome here and take the role.
Thank you very much, Richard. That is a really interesting report that we had the opportunity of reading in the last days here. So for the benefit of the audience, we're going to pick on a couple of findings from the report, highlight them, and then talk to our panelists here to see how they evaluate those kind of findings in the light of their own experience and background. So let me welcome the panel. We have Stine Olsen, who's the head of investor activities at Danske Bank, and she's working with a really interesting project at Danske Bank called Plus Impact. For those of you who haven't heard of it, it's a platform where you have, I think, about 1,000 impact on enterprises that present themselves and about 400 impact investors. Next, we have Juan Alvarez, who is a member of the European Business Angels Network, and we'll talk about that particular angle. We have Birgitte Frost Mattisen, who is working at the Danish Den Sociale Kapitalfond. She's managing partner and director there. And we have Dean Hand, the research director at the Global Impact Investing Network. Before I jump in with some questions, I just wanted to kind of like highlight a question of language here, being the academic, because I'm always wondering about the question, how do we deal with this terminology of impact investing? And if you read the literature about it, you see a couple of different trends of how impact investing is conceptualized. There is the idealist impact investor, and often in impact investing we talk about concessionary investing here. This could be foundations who step in and who say we know that we have to provide funding to important topics at below market rates because that is what is required, and that is our role as idealist investors. On the other hand, we have something that my colleagues in finance would call the arbitrage impact investors. And those are the ones who say, I know something, right? I have an ability to predict where the market will go ahead of time. And because of that, I will outperform the market, right? So if I'm able to identify Tesla years before the other investors do that, I'm actually able to outperform the market. And ultimately, that benefit will go away once all the other investors see also the trend that's happening with climate, with other things. But that is a very different angle, the arbitrage and the idealist investors. And finally, we have what I would call the realist investor, who simply says, I'm investing in normal markets, but I try to make every of my investments consider the impact that I have and ask myself as an investor, what is my responsibility and my role, perhaps through shareholder engagement, by having an active dialogue with the companies that I invest in to drive on impact. So we have three different ways. And I just wanted to mention this. Keep that in mind. There is no right or wrong definition of impact investing, but there's different people who use these terms with different purposes. With that in mind, Stina, I'd like to jump in and talk to you first here. In the report, for those of you who want to write this down, it's page 4041 once you have downloaded it. Richard is referring to a study you guys have done, the Nordic Impact Startups survey, which is, I think, the third time you have done it. And you identify a couple of myths. And then Richard analyzes his own data to reflect upon how that is comparing, his data is comparing to the data that actually is available in your study. Now, there's two interesting things that I found here. Both are what you call myths, right? So you have a number of myths that you have identified. The first myth that Richard refers to is that there is a trade-off between purpose and profit, right? So the myth supposedly says there's a trade-off, and tell us what you find. Is that really true, that there is a trade-off between the two?
No, that's what our study finds, and I'm actually glad that you picked out that myth. It's myth number 4 out of 10, as we identified as a myth sticking to the impact ecosystem, and is actually holding back progress. So we tested these myths on more than 1,000 impact startup across the Nordic, and actually found that it's the myth is busted, it's false, because actually 98% of the Nordic impact startups, they're working with impact to enhance profitability and to improve the bottom line. So we're very happy to actually being able to bust that myth. And also, when you look at the numbers from the investor report, that 80% of the investors from the survey, they actually think that impact investments delivers good return, or expect to deliver good return, and actually 60% of them, they expect their impact portfolio to perform in line or above market expectations. So that's really good. That's good news for all of us, I would say. If you want me to pick down on another myth, I don't know if I have the time, Kai, or we should.
Yes, please go ahead. Exactly.
Move on.
There was myth number 2, which I found interesting, about the focus of the impact. Yeah.
Yeah, because actually one of the other myths that we also work with was that the Nordic startups are solving the most pressing global challenges. And we actually found that this is false, because Nordic impact startup, they tend to work on local problems in high income markets. Yeah, and also we see that the Nordic impact startup, they work mainly with SDG 3, the good health and well-being. They work with the responsible consumption and production, and also affordable energy. And if we hold that together with the data from the investor report, we see that that now, as Richard also mentioned in the intro, that the investors are focusing on climate action, on SDG 13. So you can say there is a mismatch here of what the startups are working with and what the investors are focusing at.
But that's an interesting question as well. Where should the focus lie, right? I mean, we are in both reports look at the Nordics, look at Scandinavia, and of course you could say that it is appropriate that startups in this region are solving the problems that are local, that are here. But at the same time, we do have large global problems, climate obviously being one that is not surprising. But if we look at poverty, right, I mean, that also is an area where you need global action, right? And it's an interesting trend to see where money on the SDGs will go in the future. We all have seen the reports by the United Nations that demonstrate the trillions of dollars of investment that are needed to achieve the SDGs. And I think it'd be important to figure out how investors can actually focus on that global footprint that they're having there. Let me perhaps move on. I just wanted to move on to a little bit a broader focus. Johan, you're working with the European Business Angels Network, so perhaps you can talk a little bit about your experience here from the Nordic. I know you have a lot of data from the Nordic in your own work and from Europe. Talking of reports and surveys, we have many of those. Johan, you actually did one of the European Business Angel Network. So you asked business angels about their positions, about their interests. And I would like to hear from you, both in terms of comparing the Nordic perspective with the European perspective, but also specifically talking about the business angels, what you find there. Is that in line with what Richard is finding, or do you see differences there?
Hi everyone. So thank you very much to be inviting us just to talk a little bit about this report. We've launched this first edition several weeks ago, and that's fantastic because we can just compare some of the main insights that you find in this Nordic report and also this IBAN impact report. And I would say that mainly both reports are quite aligned in many of the topics. Of course, the Nordic report has some more experience because it's on a second edition. And from IBAN, the European Business Angel Network Impact Committee, we've launched this first edition. But I would say that mainly I saw we can identify mainly three differences that are quite interesting. But and we can come back later about the differences. But for example, when we are just asking in this survey to the investors that mainly are individuals, because of course we're talking about business angels, and we were asking them in which sectors or industries they were focusing their impact investing, and mainly in the ranking we have the first position, we have education, and the second one we have health, and then sustainable agriculture, renewable energy, and then microfinance. And if we just take a look about the Nordic report for this current edition, in the first position is climate, and the second one is agri-food, energy, and then health. So there are some changes on the objectives of the impact investing of the different sectors. But if we analyze the report of 2019 of the Nordic, in the first position there was the energy. So there are some changes. So probably it's a question of evolution of the different investors, that they would be interested in different industries and sectors. Then the other difference that we could identify, but it's not a huge difference, but it's mainly the weight of the impact investment in their portfolios. In the Nordic is for about, we have a 40% of the investors have 100% of the portfolio in impact investing. And for example, in our survey of the IBAN, we found that we have on the total percentage of the net worth of investing in impact investing is they're investing at a maximum of 30% of this investment. So they're slightly quite different. So that would be the two main differences, and of course that we've identified in a first analysis of these differences between the IBAN impact report, annual report, and the Nordic Nordic report.
You're muted, Kai, or we can't hear you.
Sorry. So if we're looking at the element of the idealist investor, right, and the willingness to give up a little bit of their return, is that something that you find among business angels to be a little bit more prevalent, or is it the same thing that they say we expect to get market rates or higher?
Yeah, there's in this analysis we see that they are quite aware that they cannot expect from the impact investing a higher return, but of course they are very conscious about this percentage of the return that we are expecting from this investment. So basically, we have a 46%, for example, of analyzing this equation between the risk and also the impact investing return. And basically, we have a 46% that is a risk-adjusted returns, and the social and environmental impact equally. So they have a kind of balance. And really, we have a 13% that mostly the social or environmental impact investing, but also risk adjusted. That means that we have only a 13% that totally are focusing on this investment without expecting a higher return from other opportunities, investment opportunities. That's something that is quite different, I think, also with the Nordic report. It's a question of, I suppose, of maturity.
Thank you, Johan. Birgitte, that might be a good moment to hand over to you. You are working at the Sociale Kapital Fund, and I think your organization is a very good example of both idealistic impact investing and the more market-oriented approach. So traditionally, you have received your funds from a foundation, the Trygfonden, and you have supported social enterprises where, if I understand it correctly, the focus has not been by actually virtue of that you investors are like, we don't want you to make a return on that. We do want you to spend the money with an impact. And you have more recently started a Sociale Capital Fund where you actually expect to achieve those kind of market rates. Perhaps if I could ask you to speak about that development that your organization has gone through, can you share something about us? How what that means for your organization and where you see yourself developing in the future?
Yes, you're right. We have been in this impact investing market for 10 years, and we started out being a philanthropic impact investor, and we learned a lot the first years about being that kind of investor. And we also saw that the market we entered 10 years ago was very new, very immature, very unprofessional in a lot of ways. But along the way, we started to see that the market, the social impact investing market was changing and is changing still rapidly, and was becoming ready to actually transform investments from being philanthropic into commercial investments. And that is why we wrote the first impact investing fund a couple of years ago, and is expecting to raise the second one very shortly, and will continue that journey. And if I may say so, I think being in this impact investing game for a little bit more than 10 years has probably made us some kind of experts in this impact investing field. And I think there will soon be a lot more experts, because I think this field is actually exploding in a very good way these days. And we enjoy very much this journey we are on right now. And we enjoy seeing that more and more people are following this agenda and being part of the ecosystem.
Let me ask you about some specific experiences here, because you're very close to you are an investor, you're very close to your investees, you take board seats. One of the findings in Richard's report reads very positively, where he says that the COVID crisis can be an opportunity for impact investors. What is your experience? How has this affected the investees that you have? Is it the same as every other small and medium-sized company? Is it more difficult for impact on enterprises? Or as we hear in the report, is there actually really an opportunity here?
I think the answer must be both yes and no. I think we have not seen a positive effect due to COVID-19 related to if the impact investing market is growing. And this fine report actually shows that I think it was only 13% that has been investing in health issues. But due to the high sense of urgency and due to that this is actually something that we can all relate to, I will suspect or expect the numbers to be very different next year when Richard does this analysis again. But we haven't seen it so far, but I think we will see it in the future. But again, if I must say, I don't think that it is only the COVID pandemic that will push this ecosystem and mature the impact investing market. I think actually there are at least 3 other global trends that will push this agenda, and also a local Nordic trend. And the 3 global tendencies are that we have seen that if the social inequality in a society gets too big, something will happen. We saw it in France, where the yellow vest went walking on the street. We have seen Black Lives Matters that turned our attention to the global inequality the global inequality. And of course, there's the Me Too, who got us to focus on social barriers, lack of diversity, and so forth. And these 3 global megatrends, I think, will make the impact investing area larger. And then the Nordic tendency I will mention here is, like I said before, that the market for the social startups are just getting so professional this year. And I think we will manage to make some very good, I don't know if we should call them unicorns or zebras or what we should call them, as Mette mentioned this morning. But I think we will have some very good examples of how can you invest in both high scalable impact and high scalable return on investments as an investor. So I think the agenda will broaden, the ecosystem will expand widely for the next months and years.
Thank you very much. Dean, let me turn towards you. I've kept you until the end because you're speaking for the Global Impact Investing Network, which is, I think, the oldest. I don't know. I just claim this now. I might be wrong there, but I think one of the oldest impact investing organizations out there. You're a global network. So you can actually give us a view from the outside and tell us whether the kind of debate that we've had here looking at the Nordics, looking at Europe, is reflected in the rest of the world, or whether you see different trends here and what that means for us.
Thank you, Kai, and congratulations to Richard on the research report. The Global Impact Investing Network, as you quite correctly say, has been around for some time, certainly well over a decade, and we've been researching at a global level for over 10 years investor trends and activities. We also obviously develop tools and processes to help impact investors make better decisions in terms of where to allocate their capital, how to manage their investments over a period of time, and ultimately, and particularly as it relates to startups, when to exit, based on good data and good information that helps you understand the timing of those things relative to the impact. I think what I'd love seeing research that comes out of particular geographies, because it helps to make comparisons as to what we're seeing on a global level versus what we see more locally, and to see where there are differences as well as where there are things that are the same. And so maybe I can comment on something that is similar and something that is also a difference that maybe presents a challenge for the Nordic region that might be worth taking forward in particular. So the one thing that I thought was very interesting from a similarity point of view is that the Nordic report talks about 83% of investors expect their portfolio to deliver on their market rates of return. And it's interesting that the other panelists have also commented on this in one way or another. The Global Impact Investing Survey, which really looks at about nearly 300 different organizations representing about $414 billion of impact assets under management, talks about that 67% of them aim for their characteristic that they're looking for is market rate returns. The balance, the other third, for example, may purposely seek concessionary returns. But what is interesting is that about 88% of them are meeting their financial expectations, and about 99% of them are meeting their impact goals. Those are very high trends, and what we see over a decade of doing this is that there's a high degree of longitudinally of consistency with that observation. What is one of the differences that we did notice in the Nordic report relative to global trends is that in the Nordics, about 70% of the respondents to the Nordic survey indicated that they're not measuring or reporting on their impact. And that is an area to a certain extent of some concern. One of the tenets, you talked about definitions in the beginning, of impact investing, and what really distinguishes it from other analogous types of definitionally of responsible investing, ESG investing, sustainable investing, whatever terminology you want to give it. But what distinguishes impact investing from any other investment that may be concerned about impact is this ability to actually measure impact performance results, being able to know exactly what the result is that you're actually achieving, not only from a financial perspective, but also from an impact point of view. This becomes absolutely crucial to making more informed decisions throughout the investment cycle. So, for example, where best do I allocate my capital to? I want to achieve some level of impact. I need to know that to put it there versus there will allow me to achieve those results. The timing of exits, for example, and being able to manage in early stage and startup investments, there are the need to actually sit on boards and manage your investment through the investment, the tenure of the investment. Knowing those impact results is absolutely crucial. So from a global perspective, about 67% of investors are particularly concerned about impact washing. And to the extent that you're not measuring, contributes to impact washing. So things like Iris Plus, for example, which is a tool to a system to be able to actually measure your impact results and know things, are absolutely crucial. So more than just mapping against, say, SDGs or, say, the ABCs of impact management project, is being able to actually say, what are my results that I actually achieve over a period of time? And if I draw that back to COVID, for example, where we also looked in the same way the Nordic research looked at it, is what are investors actually doing? Knowing these results becomes absolutely crucial, particularly at this time. So in the COVID context, what we found was, not only through our investor survey, but also some subsequent research that we actually did, is that while it's to be expected that many investors will see a level of underperformance, I think that's nothing, there's nothing surprising in that. What we did find interesting and quite inspiring, in fact, was that 18% of investors actually expect to outperform their portfolios. In other words, at this time, there is now is the time for impact investors to really step up. But there are a couple of critical things that they really want to take into account when investing at this particular point. One is that impact is at the absolute center of every investment decision. The second one is that sometimes we have to rethink due diligence processes at this time. It's harder to get on the ground. It's harder to go and meet in person. And so investors are thinking about very creative ways in which to actually engage with their investors in a different kind of context at this point. The third point is that actually what's quite crucial here is a set of skills amongst investors that we don't often talk about. So often this kind of skills that we expect investors to have are the hard analytical skills that would add or make good decisions. But actually what's needed right now is a lot of empathy, which is a softer side of investing, but to be able to actually relate very much and understand at a very in-depth level what's going on the ground is crucial to making the right investment decisions. And the final thing is that, I mean, one of the things this pandemic has brutally exposed, and Brigitte pointed this out in terms of the kind of movements that are afoot at the moment, is that the absolute the divisions that exist in society, the fact that actually people get left behind. It's not, we don't have an inclusive world as much as we would like to think we do. We do not. And so investors really need to actually think about how they're including and being much more inclusive in their investment decisions, and how that stakeholder voice actually comes through to be incorporative. So hopefully I've given you a little bit of an overview. I think there's some huge challenges for impact investors worldwide, particularly at this time. And again, I think it's such rich research that you've developed for this local market, and I think it's very welcome.
Thank you very much, Dean. A question I would like to now put towards the panel in generally is a meta question about research. So all of you are doing research. Richard has presented a report, but all of you are engaged in understanding your own activities, the activities of your members. I would like to ask the question now where, and this is a little bit of also interesting for the academic world, because I'm not just representing myself here. I've just yesterday been on a phone call with a colleague from Jesade, Lisa Heenberger, that many of you know, Stefan Schaltegger from Germany, Vanina Faber, who is at IMD in Lausanne. And we're writing now an editorial for a special issue on impact investing. And one of the questions we will try to address in that editorial is, where should we academics focus our research in the future? Like what would be interesting things to research that you would like us to work on, that you would like to see quality research happening on, or to collaborate on, of course, as well. But what are the questions that need to be answered for you to do your jobs better? And perhaps also like, oh my God, stop doing that kind of stuff, right? If you think of, there are a lot of research reports out there where you might say, well, we don't need more of those, right? So what would be the really key research questions you would like to see activities in? I'll just let's see who would like to go first here. Is there somebody? Looks like you are, Birgitte, you're raising your pen there. Yes, please go ahead.
Yeah. Actually, I think I will continue what you just mentioned, Dean, because I very much agree with we need to be able to measure the impact we create. We need to get hold on the metrics, and we need to be able to transform the metrics into a capital value. If we are not able to do that, we are not able to show that this is actually a good investment. And I know we are all trying to solve this, and we are all using different methods to calculate the value of the impact that these companies create. So what I would hope for will be available in the futures are some kind of unified taxonomy, unified way of calculating the value of the impact, instead of using so many differentiated ways of doing it. So we maybe make the investors more insecure than secure that this is a good investing platform or a good investment to do.
Thank you, Birgitte. Johan, you also had a comment you wanted to make there.
Yeah, but basically it was on the same line. This we've identified also in the IBAN impact report, there was a kind of lack of knowledge about how to measure the real impact of their investments in the society and also in the environment. So I would say that that's something here to explore more in deep about to have a clear overview of measure this impact. And if it would be interesting, probably just to think about a very procedure to measure it and a standardized way of doing it, that would be amazing, because right now is one of the missing points, and there's a lot of lack of knowledge about the measurement and the impact of the measurement of this impact.
Thank you, Juan. So measurement, and what Birgitte was saying, comparability would be important. Stina, you raised your hand.
I may have a different approach, but my reply would be: don't make it too complicated, don't make it too difficult, because we have seen from our research, and our data, as more hands-on and as practical as possible, that is what actually delivers the best data. I know it's different. Writing research papers, but the startups that we are working with, they're innovative, they're agile, they work fast, and I actually think that we should try to adopt some of these characteristics also in the research we do, and the common measurement standards that we try to set up. Because I want to pick down on the data point that some of you can call the pitfalls with impact investing is that we don't have enough data on the performance of the impact investments, and that was also one of the key findings from the impact investor survey last year. But what we also found in our research this year, if when we focus particularly on the impact startup, it is that there is no one breed of impact startup. They are as specific and have as special characteristics as, call it, conventional or traditional tech startup. But what we found is that it makes sense to compare the impact startup within their own vertical. Let's say if it's an impact startup focusing on food tech, it makes sense to look at the vertical food tech and compare the startups and the data on that respect, and not just comparing the impact startup with a broad breed of impact just because it's impact. In this way, I think we actually will be able to drive much more data forward. Yeah.
Dean, do you have a contribution there?
Yeah, Kai, I love the question. I think it's great. So essentially, we think that there are three pieces of crucial infrastructure that are actually needed for the impact investing sector. The one we actually have, but the other two are the ones that I think the other panelists are actually talking about. So the one that we have is that we have a taxonomy of definitions. That's been well documented. There's a Rosetta Stone of how that translates across SDGs and all sorts of things like that. And you'll find that in IRIS particularly. It's got thousands and thousands of definitions, and it's harmonized all sorts of languages to get to that particular point. But the second piece, which is actually quite crucial, which is what I think people are talking about, and that's being able to actually understand the comparative value of one investment to another. And that's very difficult to make comparisons. But it's a crucial piece of infrastructure if we're going to build things like impact performance benchmarks, for example, indices or ratings. We've actually built a methodology on how you can actually do that based on over 1,600 observations to be able to actually understand exactly how one investor, whether you do it in a vertical, for example, and it's in an open public comment period at the moment, in order to build a standard so that the industry has something that they can actually make those necessary comparisons. And the piece of research that I'd love to see is actually trying to build what those impact performance benchmarks might look like. So test the methodology to see whether it actually works. Try and break it, if I can put that challenge. The third pillar that is missing is in the same way that the financial markets even in private markets, people share data, either through their reporting or in some kind of public forum in one way or the other. And in the impact performance result area, that's the third pillar that investors need to actually start sharing much more of their impact performance results with each other. They can do that in a number of different ways. Anonymity and confidentiality are all things so that you don't reduce people's competitive advantage. But the point is that with the taxonomy of definitions, the methodology to be able to actually compare so that you've got things like impact performance benchmarks, and together with a large, basis of data, you should be able to actually make those value definitions. So my challenge to researchers is go and build those practical things like what do those impact performance benchmarks actually look like. They're very familiar to the financial markets, but not yet a piece of infrastructure that exists in the impact investing industry.
Thank you, Dean. Very interesting. So clear focus on measurements here and trying to figure out something that is practical, as you say, Stine, but also something that really, as Birgitte was highlighting, it helps to kind of like put numbers, to put capital numbers behind that. To make it more complicated, let me advance one thing which I feel we could do a better job at when we look at impact investing. So my claim would be that most impact investors look at the impact of their investment in their investee. However, if you read Joseph Schumpeter, Entrepreneurship, Creative Destruction, Transformation of Industries, then you know that is only one part of the equation, right? So what Schumpeter says is an entrepreneur finds a new equilibrium, and this is traditional economics, demand supply. So he either or she is able to produce something cheaper at the same quality, and therefore that she's going to make a profit, or a higher quality at the same price or at not too high a price, in which case people are willing to pay more, in which case demand goes up again, right? And what we're thinking about here is demand for our resources that we care about. Unemployed people, disadvantaged people, environmental resources, and so on, and demand in the sense of protecting and helping those kind of resources. So if we want to do that, an important question then is, should an impact investor not also focus on the unobserved opportunities and making them visible to the rest of the market? So imagine you go into a well-documented market, and Birgitte, I'm going to look at you now as one of the very early investors in a enterprise that I mentioned a lot called Specialisterne. It's a Danish startup that works with people on the autism spectrum in software developing, and basically they provide an employment for people who have been thought unemployable. And I've been giving this talk for many, many years, and I remember one year, this was at IMD, afterwards somebody came to me with tears in her eyes and he said, yes, my son also is on the autism spectrum, and I totally get what you're talking about, because it's so important that he finds an employment. It's like, oh, well, what does your son do? It's like, well, he drives every day by train 1 hour from Lausanne to Bern to work in a supermarket to bag groceries. And I was like, wow, right? So what Specialisterne has done, it has found the possibility for people on the autism spectrum to work in something that they're not just reasonably good at, but they're actually very good at. They have these specialist advantages. So the Sociale Kapitalfond was an early investor here. And my argument here would be, yes, your investment has helped to grow Specialisterne. But more importantly, it has shown other people around Europe, around the world, that there is an opportunity to invest in. So the impact that we should attribute to the Sociale Kapitalfond should not just be the 50 people who are today working at Sociale Kapitalfond in Denmark and a couple of countries where they have grown and replicated, but the many, many other startups. There are startups in Germany, there are startups in the Netherlands, there is a SAP, Hewlett Packard that have started to hire these people. So I would really like us to raise the awareness of impact investors to look at the compound impact of what they do. Right? So if I'm entering the electrical car market at this point, that is a completely different thing than backing Tesla in the early years when they're just coming up with their innovations. Any thoughts and comments on that from your side?
I think you're raising a whole issue about what an investor's contribution actually is, and all sorts of different definitions for that actually exist. It's one of the other things from a research point of view, if you want, that is at the frontier at the moment of actually understanding what the contribution is. And sometimes contribution is difficult because we want to directly attribute it to my dollar to that result. And that's often hard to, firstly, that's a difficult thing in and of itself. But when you want to think about the broader impact, sometimes people can claim things that maybe a number of different people have played a role in actually doing, not only your particular investment. But I think I think that while I'm less worried about measuring that other part of it, because and that's not to say that measurement's not important. I think you know by now that I think it is. But I think that these are amazing examples of how you're contributing to a much bigger infrastructure. I mean, Elon Musk's strategy, for example, is not about making cars, actually. It's actually about establishing an infrastructure globally that allows those cars, any car, to operate. That's really what he's actually trying to force if you look at his particular strategy. So with an impact investor, I think you do have to think about the kind of broader impacts. And one of the obvious ones is that sometimes, particularly at these early stages, you demonstrate to much more traditional, often conservative institutional investors with much deeper pockets what is possible. In other words, you're starting to actually say, here is a business opportunity that if we in fact invest more into, and we can do it at scale, and a lot of early startup stages investors are really concerned not only with the smallness of the initial investment, but actually getting it to scale. And the Nordic research shows that they're focused on the scale. So I think that's at the back of the mind of most investors has got to be their longer term, broader impact than just the fishbowl of their immediate stuff.
Thank you. Birgitte, you have a comment.
Yes, I think that what you talked about, Kai, we consider when we do the impact assessment, when we meet either startups or SMEs and we do the impact assessment, we always address the perspective of scale, depth, and duration of the impact. Like you mentioned, specialisterne, they have a deep impact on people's lives, but it's only, let's say, 50 persons who is having the impact, whereas other investors might go for investments that has a larger scalability or have another duration. So us as an investor, we always ask, do we want scalability? How deep do we want the impact to be, and what is the duration? And there's no answer that we always choose scalability or we always choose duration, but it depends on the business model and it depends on the case. But these are the three different impact assessments we always do.
Thank you. And Stina, you had a comment?
No, I just have a small comment. I really agree with what Birgitte is saying, and also Kai, I want to pull forward a concept or model from when I was studying at CBS that I actually still use from time to time in my daily work, the theory of change, which I think is a relatively great model to apply as a startup or as an investor, where you look at the input, the output, and then in the end the impact. But it actually allows you to break down, you can call it the impact journey or the impact line, so you know specifically where, I mean, the difference you make or the impact that you are trying to create.
Thank you. To sum up a little bit our discussion here, and perhaps also for the audience out there, something to think about where we might want to go in the future with the field and with our interest and research in the field. I think there's 5 different elements that we can consider. We have touched upon some less, one a lot, as you will see in a second. But often when we talk about impact investing, we have these 5 variables. There's the intentionality. Does it matter that I set out to have an impact, right? What if I have an impact anyways and I just happen to invest in Tesla because I need to fulfill my quota of publicly traded companies. So I think intentionality is really important. We'll probably all agree with this. And I think it's important to understand what are the intentions that bring people to impact investing. Dean, you talked about empathy. I think that is a question, and I find investors have real trouble talking about that. So I mean, the ones that come more from the hard side. It is, and I would be interested in Richard's numbers and also the ones, Tina, that you have when people claim to have a market return, whether this isn't something they feel they are obliged to report and say, because otherwise they might not be taken serious in the field that they're in. Another question we have is additionality, which I think we should really also look into, right? If I buy Tesla shares today, am I an impact investor? Probably not. I'm just transferring my cash to somebody else who sells their shares and who might buy, I don't know, another public equity for it, right? So the question of additionality, I think, is really important. I think there's a lot of people who consider themselves impact investors because they hold assets that generate impact, but all they do is they refer assets between different people who are holding those assets. So they're not really creating that additionality. We talked about measurement a lot. I think that is very important. Two more elements that are often mentioned are materiality and attributability. So materiality is the question that you were coming towards before, Birgitte, right? How material is this to the person? You called it depth, right? I mean, if I plant a couple of trees, does that make yes, it absorbs CO2, but is that a material effect? Is it possible? Can we plant enough trees around the world to really save the environment? And the last one that I find really interesting here is attributability. And this is where we come back to the industry, the sector, right? Who do we attribute the impact to? And does it matter that we might attribute it to somebody who actually didn't cause it? And my argument would be no, right? There might be investors out there who might be willing to pay for the attribution of impact because that is how they want to present themselves, which might create income possibilities for others who do not need that, who don't necessarily have to have the impact that they have generated attributed to themselves. So that's, I think, is a really interesting question to end upon. Can there be impact derivatives where people actually trade the impact that has been created? And is there an interest among investors to pay for that ability to say, hey, I have this impact investing, this impact is being attributed to me. With that, we're coming to the end of this hour. I'm sorry, I'm actually 2 minutes over the allotted time of Richard, who will be coming back and joining us now, giving us a few couple end words. Please do download the report. We have kept the debate somewhat general because I didn't want to go into all the details of the report without the audience having read that, but do read it. It's really interesting. It's long and very, very deep and interesting reading.
Thanks a lot for that. Thanks a lot for that, Kai, and moderating this conversation with Dean and Stine and Juan and Birgitte on the launch of our Impact Report Nordic Investors 2020. We are still in the mid of the day and we have 4 things to go. And so, yes, stay tuned because with crisis comes opportunities and change. And the philosopher and futurist Barbara Max Hubbard once said, when things are breaking down, look for what's breaking through. So the next session at 3:10 p.m. is with my friend Alan Laubsch from the US, and he will take us through a session and a conversation about from breakdown to breakthrough. So please be with us here in 10 minutes, 3:10 p.m.